Recently, there's been a big surge in the market of people looking for high-yielding stocks and ETFs. There seems to be a bit of a shift towards investors wanting reliable income amid market volatility. But why should you, as an investor, consider a high dividend yield ETF as part of your portfolio? Well, straight off the bat, they can offer a level of financial stability, potential capital appreciation, and even some inflation protection, all whilst generating regular income. With the growing popularity of these ETFs, there's never been a better time to look at your options. In today's video, we're going to look over 3 of the best high-yielding ETFs. We'll go into the specifics on each ETF and what makes them stand out from the rest. Whether you're looking to supplement your income or build a more resilient portfolio, these ETFs may be just what you're looking for. Okay, so my first pick is an ETF built up of companies right on our doorstep. This is the iShares UK Dividend ETF. The ticker symbol for this ETF is IUKD. This ETF focuses on 52 holdings within the UK, which have been carefully picked from the higher yielding subset of the FTSE 350 index. This ETF trades at a price of around £7 to £8, which makes it a great option for new investors looking to dip their toe in investing without a large commitment. If we dig a little deeper, we can see the top 10 holdings within this fund. I'm sure you'll recognise some of these household names such as HSBC, Imperial Brands, Vodafone, and a few of the more notable banks. You'll notice there's quite a few banks within the top 10 holdings, so it's no surprise that within the sector exposure, financials take the top spot with others being split below. The bit we're interested in though is of course the dividends. This ETF provides a really impressive annual dividend of 5.18%. So for every £10,000 invested, you could expect around £518 in passive income. Dividend history with this fund has been fairly strong, with recent years floating somewhere between 5 and 6.6%. Dividend is split across the year into quarters, those being March, June, September and December. You'll find this to be the most common distribution schedule amongst most ETFs. Let's take a look at the overall performance. I tend to look at the long-term stats around the 5 or 10 year returns if possible. With ETFs, they're really built for long-term investing in mind. If you're planning to invest, I'd ensure you're comfortable being invested for at least 5 years to see the best returns. We can see this ETF has returned around 41% over the past 5 years, which is great growth. This works out around 8% per year. This is including the annual dividend. I personally really like this fund. I think it's a really simple ETF to get your head around if you're new to investing. However, I wouldn't put all of your eggs in one basket, or in this case, in one market. I'd always aim to build more of a varied and diversified portfolio. This next fund might help you do that. Next up, we have the Legal & General Quality Equity Dividends ETF. The key part here is that it has ESG exclusions and it also excludes the UK. Quite a mouthful this one, but don't get too bogged down with those details as I'm going to break down this ETF. The ticker symbol for this ETF is LDEG. This next one is vastly different to the previous ETF. Where the previous ETF looked at purely UK holdings, this one gathers companies from around Europe but excludes the UK. Depending on your outlook of the UK's economy, you may see that as a good thing or a bad thing. However, if you're looking to get exposure of all of Europe, including the UK, you could consider buying both this ETF and the previous one to complete a full Europe-based ETF. In April 2021, Legal & General Investment Management launched a range of 3 quality equity dividend ETFs, and this was one of them. These were designed for investors seeking equity income with a heavy focus on the quality of the underlying companies, looking for those with strong dividend characteristics while excluding those facing significant environmental, social and governance risks. The stocks within these ETFs have been carefully chosen with factors such as strong balance sheets, strong profitability, and a good history of paying a reliable dividend taken into consideration. The list of quality checks was quite vigorous, which as investors is exactly what we'd want to see. Now let's take a look at more of the finer details. This ETF includes 137 holdings with a heavy focus on the financial industry, with the other industries being fairly evenly split. These top sectors are deemed to be less volatile, so this is exactly what we are looking for within a stable, dividend-paying ETF. Here you can see the top 10 holdings within this fund, which amount to around 13.5% of the fund. This is really good, as too often you'll see ETFs which are extremely top-heavy. A lot of the more common ETFs nowadays can contain around 25 25% of its overall weight in the top 10 companies alone, which can expose you to some unnecessary risk, with the majority of your investment being sat riding on the success of a few companies at the top of the weighting. As it stands, this ETF costs around £10 per share, which is really approachable for new investors. It also pays a really healthy dividend at 4.29%. Looking at the previous years, it's grown somewhat, and it's currently fluctuating between the 4 and 5% dividend. We can see here how this dividend is split. To provide some context to these numbers, given the share price is currently around £10 and the dividend yield per share is around 4%, you'd expect around 40p in dividends per year per share. This essentially is showing how that 40p is split across the 4 quarterly payments. This ETF bunches the majority of its dividend payments into June, which isn't that uncommon to see. Moving on to the overall performance, this ETF has had some really respectable returns. Can, however, only look back as far as the last 3 years, as this ETF is relatively new. Including the dividends, this fund has returned around 31% over the past 3 years, so roughly 10% per year. I really like this ETF. I think it includes enough companies that it's diversified enough, but also the split across different regions and sectors is also really healthy. This ETF seems to provide the perfect balance between a healthy dividend but also overall growth. You can see how this ETF would be really appealing in the current market where people are looking for stable, reliable income. We've covered 2 ETFs there which cover markets quite close to home. But what if we wanted exposure to markets that are potentially a little bit more further afield? This next one might be for you. Our third option, we have the VANGUARD FTSE All World High Dividend ETF with the ticker symbol VHYL. This is a really popular ETF amongst investors. It's one of Vanguard's most popular offerings. This ETF tracks over 2,000 high-yielding, mid and large-sized companies from around the world, rather than just the UK or Europe. This fund has a strong lean towards the US market, with Japan and the UK being close behind. This fund provides great global exposure, and given how many holdings it has within it, your investment is much more spread when compared over the 2 other funds. Top 10 holdings here only make up around 14% of the overall fund, again adding to further diversification. There will be many names you will have heard of on this list. Following the same theme as the other 2 ETFs, this fund has a strong portion built up of financials, with consumer staples and industrials being close behind. It would seem there's a bit of a common theme with high dividend paying companies sitting within one of these 3 sectors. This ETF provides a dividend. It's the lowest dividend of these 3 funds, however it's still a respectable number at 3.11%. We can also see the dividend history here, and it's floated between 3 and 4%. This dividend is also paid out quarterly, just like the other ETFs. Looking over the historical performance, the 5-year returns are at 47%, so just under 10% growth per year. This is including the dividends. For such a diversified fund, this growth is great. Despite this fund having the lowest dividend, it has the most growth, so overall, over the last 5 years, this fund would have brought you the best return when compared to the other 2. So we've gone through 3 great ETF options here, but each of these funds have its own unique strengths. IUKD is your go-to if you're focused on extracting income from the UK market, where reliable dividend-paying companies dominate. IDEG stands out for those wanting more of a European exposure, offering sector and geographical diversification. VHYL is ideal if you're looking for wide-ranging global exposure, covering both developed and emerging markets, with a focus on companies that consistently deliver high yields. Depending on your investment strategy, one or multiple of these ETFs could be the cornerstone of a strong income-generating portfolio. I hope you found this quick-fire video quite helpful. Any investment that you are looking at, I'd always advise go and do your own research. If you've enjoyed this video, do remember to like, subscribe and comment with any feedback you may have. Let me know if you're considering any of these ETFs or any alternative options that I may have missed. Thank you for watching, and I'll see you in the next one.